The first step is understanding some of the key different types of the insurance coverage available to your business. First of all, general liability insurance. Think of global general liability insurance as on your business safety net against unexpected mishaps. It protects against third-party claims for the bodily injury and property damage. For example, if a customer falls in the injured to your place at business, general liability insurance is intended to cover this type of claim. However, it is important to note that general liability insurance does not protect company owned or property. Property insurance. Property insurance is your pullback on the face of the unforeseen events such as fire, hurricanes, and the tornadoes and vandalism that damage your company, real or personal property. Fidelity insurance. Fidelity insurance general covers damage due to the internal or external criminal acts. Fidelity insurance migrates of the loss exposed resulting from the criminal acts such as robbery, burglary, fraud, forgery, dollars stolen third parties, less exposed resulting from the criminal such in other crimes committed on the organization on directors, officers, committee members, managers of the employees. Number 4. Worker compensation insurance. Worker compensation insurance provides replacement and the medical benefits to the employees who are injured into the course of employment. Is North Carolina any company with 3 more employees in required carry this type of insurance? Director and officer liability insurance. Leading a business come with the challenges, and directors and the officers liability insurance, commonly known as DO insurance, provides the additional law protection for your leadership team. DO insurance is payable and directors and the officers on the company itself. Its implication for losses and the advancement of the defense costs related to the legal action against directors and officers of the company for the decisions they make. It is important to evaluate and understand what is particular DO insurance policy specifically covers to the recommend of your consider including coverage for past, present, for future directors, defense against claims seeking on non-mandatory remedies, and the wrongful termination in legal discrimination and failure to proceed insurance. Cyber insurance. Cyber insurance provides financial protection against the potentially devastating and cost of the cyber attack or data breach. Cyber insurance policies may cover expense to the help business mitigate of the aftermath of an attack, such as forensic investigation, legal fees, customer notification, and the regulatory fines. These policies may also cover business interruption losses, cost associated with public regulations, and the crisis management efforts to help your company restore customer trust and the confidence. Umbrella insurance. Umbrella insurance provides additional liability coverage beyond the limits of the other insurance policies, while your primary policies such as general liability, workers' compensation, and the automobile insurance provide coverage up to a certain limit. Umbrella insurance kicks in the those who limits exceed. This is extra layer on protection can be especially valuable in the scenarios where a sufficient liability insurance lawsuit areas such as a major and accident involving multiple vehicles. Without umbrella coverage, you could be left personally responsible for covering expense that exceed the limits of primary policies, putting your assets in the financial stability of the company at risk. Representation and warranty insurance. During times the transition, such a merger and the acquisition, consider purchasing representation, representation and warranty insurance coverage provide financial protection breaches in the representations in the warranties made in the connection with transaction depending on the size and purchase price of the transaction. This may be worthwhile option. Tail coverage. Tail coverage extends coverage for the claims made of the after policy has expired, ensuring continued protection during periods of the transition, such a merger, a question of the change leadership. This can be useful if the state of the limitation the most claims extend beyond of the sale of your business. Commercial auto non-owned the hard coverage. Commercial auto insurance can provide coverage for the company vehicle crash related expense such as medical expense in vehicle damage, as well coverage for the damage sustained in the accident with an insured motorist. However, commercial auto insurance does not provide coverage for the vehicle that your business does not own, such as retained vehicles, employees, personal vehicles that are used for the work errands. Hard non-owned auto insurance can expand your business coverage includes these companies' vehicles. Remember, insurance needs vary depending on the nature of your business, so it can be important consultant with the qualified insurance advisor to tailor your coverage plan that meets specific needs, ensuring that your business has adequate insurance coverage to help protect your assets and mitigate potential risk.